Hello students. So today we will be taking up with question number 11 of your study material. Now this question 11 is very much similar to question 9 and 10 done in the last two lectures. So advisably what you people must be, in fact 8, 9 and 10 very much similar to all the three questions. Only one new point is there. Debentures point. Other than debentures point, it is my advice that all of you try workings on your own. Don't listen to the video. Try the workings on your own. Then play the video and verify you have done it correct or not. Do the accounting in the books of transferor company on your own. Then play the video and verify you have done it right or not. And same way, do the accounting in the books of transferee company and then play the video and verify whether you have done it correct or not. So ideally, you all must be trying question 11 on your own. This video I am making just for your guidance. Okay. Don't worry, the video is going to be completely in detail like the previous videos only if you don't understand any point. But you all are supposed to try the things on your own. And then you watch the video and verify whether you have done it correct or not. Okay, the summarized financial position of Anu Limited as on 31st March 2019 was as follows. Equity shares of 100 each fully paid up. So 40 lakhs divided by 100. 40,000 equity shares will be there. General reserve 2 lakhs, P&L 5 lakhs. What is export profit reserve? You must have guessed it right. Statutory reserve. Okay. 9% debentures of 100 each 5 lakhs and trade creditors 2 lakhs. Goodwill is also there 5 lakhs, tangible fixed assets, stock, debtors, cash and bank. Now, additional information. Underline, Amulya Limited agreed to acquire the business of Anu Limited. So, Amulya agreed to acquire means Amulya is the purchasing company, transferee company. Anu Limited is going into liquidation, that is the transferor company, with effect from 1st April 2019 with following conditions. The purchase consideration, clearly given, the purchase consideration payable by Amulya Limited was agreed as under. Directly given 40,000 equity shares of 100 each issued by Amulya Limited at rupees 150 per share. So premium is 50 rupees. Now I'm not explaining anything much in detail because three questions 8, 9, 10 similar have been done. Cash payment. So one mode of payment is equity shares. Another mode of payment is cash. 25 for every share in Anu Limited. Make this Amulya Limited. Amulya Limited discharged. Another word discharged. 9% debentures of Anu Limited at 20% premium. I told you discharged will give us agreed value. And what do you mean by 20% premium? Premium means agreed value is 20% more. Okay, along with the word discharge, when it is given 20% premium, means the agreed value is 20% more. 5 lakhs plus 20% agreed value is 6 lakhs. Now by issue of its 10% debentures of 100 each at a discount of 4%. This is the new point. Last lectures what we have done, if you see the workings of last lectures what we have done, you will find that in those lectures the debentures have been issued at par only. Okay, in those lectures you all can see this is the previous lecture what we had done. Here you will find that in all other questions the debentures were issued at par. Even if you see question number video lecture 10, you will find there also. See here in question number 8 also, second adjustment issue at par. Only for this adjustment I am doing this entire question, otherwise all other points are covered. Here they are not issued at par, they are issued at discount. So what will be the effect, we'll see when we do the solution. Workings will be affected as well as journal entries in the books of Amulya Limited. Last entry will also get affected. Anyway, we'll see that when we solve the question. Amulya Limited will take over the tangible fixed assets at 180% of book value. So tangible fixed assets are 30 lakhs, 180% of book value. So 30 lakhs, 180%. Okay, that is 54 lakhs would be its agreed value. Stock at 10 lakhs, stock's book value is 12 lakhs, agreed value 10 lakhs. Debtors at their face value, so debtors 5,80,000 itself, okay, but subject to a provision of 5% to cover doubtful debts. So what will be the agreed value of debtors? 5,80,000 minus 5%. Okay, 5,80,000 minus 5%. That would come to what amount? 5,51,000. Okay, what would be the agreed value of debtors? 5,51,000. And creditors are taken at their book value. So creditors at book value, see, they remain silent about debentures, because debentures here it is given they are taken at 20%, premium means 20% more value. Anu Limited sold 1/5. Okay, this also we have done in the last question now, question 9 and 10. 1/5 of the shares received from Amulya Limited at rupees 160. Now shares are received at 150, but you are selling at 160, means here you are selling at profit per share. We'll see the entry when we solve the question. But as I said, all of you would be trying the things on your own. The cost of liquidation of Anu Limited was 75,000. Now, cost of liquidation of Anu, is it mentioned that it is paid by Amulya Limited? No. Means it is paid also by Anu Limited. Nothing is given, means it is paid also by whom? Anu Limited only. And so entry will come in whose books? Transferor company's books. Okay. Entry for this will come in whose books? Transferor company's books. Export profit reserve is to be maintained for next 3 years, means it is a statutory reserve. You are required to prepare realization account, shareholders account and cash and bank account in the books of Anu Limited. Now see, you are asked realization, shareholders and cash and bank only, but still you all make Amulya Limited account also and equity shares of Amulya Limited account also. Even if not asked, you make it. In exams they consider that as workings and they have 1 mark of those accounts also. So you have to make all the accounts whether asked or not. Okay. Now this is the accounting asked in the books of transferor company, and pass necessary journal entries in the books of Amulya Limited, that is transferee company, after acquisition on 1st April 19. So same accounting, kind of accounting is asked what we have been doing in question 8, 9 and 10. Exactly similar accounting is asked here also. Now before we start the question, which 3 things we have to first identify? Is it merger or purchase? Second, method of purchase consideration. Third, if it is merger, pooling of interest method in a transferee company's books. If it is purchase, then purchase method in transferee company's books accounting. Let's identify now which are the 3 conditions of merger. Now you all must be confident. All assets and liabilities are taken over. Yes, all assets and liabilities are taken over. There is no asset which is going to be sold by the transferor company itself, like we had in the previous question. Investment was sold, here no such asset. Liabilities are also both the liabilities taken over. But what is the second condition of merger? At book value. Here they are not taken at book value. Adjustment 3, all the agreed values are given. Even adjustment 2, debentures agreed value is 20% more. So it is not merger, it is purchase. Second condition of merger is not satisfied. So many assets and liabilities are not taken at book value. Also third condition is not satisfied. Entire purchase consideration should be paid in the form of equity shares. Here adjustment 1, cash payment is also done. So both second and third conditions are not satisfied, it is purchase. Now which method of purchase consideration is it? Net payment method. First adjustment. Modes of payment, equity shares and cash payment are given, and nothing is missing in that mode of payment, means it is net payment method. And because it is purchase method of merger, amalgamation, purchase method of accounting will be followed in the books of transferee company. Now you all pause the video, try the workings on your own, and then play the video and verify you have done it right or not. Okay. So I am doing working note 1 for debentures. Okay. Existing 9% debentures are 5 lakhs. All of you can see that. So 9% debentures 5 lakhs. Now they are discharged at 20% premium. So we have to add that 20% premium means we are paying more amount. So if we add 20% premium, then 5 lakhs 20% 1 lakh. What is the agreed value of debentures? 6 lakhs. Okay, 6 lakhs is the agreed value of debentures. Now, here what is the new point in debentures? Issue of 10% debentures, 9% debentures we are settling at this value, okay? But what are we going to issue in the new company? 10% debentures, but at a discount of 4%. So how will you find number of 10% debentures? Number of 10% debentures of Amulya Limited to be issued at discount. What discount? 4% discount. So how will we find that number of 10% debentures to be issued at 4% discount? 6 lakhs is the amount of agreed value, and since 4% discount, the issue price will be 96 rupees. 100 minus 4, 96. So 6 lakhs divided by 96. How many debentures will be issued? 6,250 debentures will be issued. This will have relevance in the last entry, okay? In the previous questions, what we have been doing? In the workings, we have been dividing by 100 only. See here, 100 only, okay? But in this question, since they are issued at 4% discount, will not divide by 100. 100 minus 4 will divide by 96. So how many debentures will be issued? 6250. This will affect last entry in the books of transferee company. We'll see when we solve it. Okay. Now second workings we have to make for purchase consideration. In bracket, net payment method. Okay, be attentive. Which are the two modes of payment given to you? As per adjustment 1, I hope all of you would have paused the video and tried on your own first. And from here you are just trying to verify. First mode of payment, equity shares. Look at adjustment 1. Here very simple, we don't have to even make any equation. Directly given, 40,000 equity shares of 100 issued at 150. Every question we have been doing that equation for 1 share, 2 shares. So for these many, how many? Here directly given, 40,000 equity shares of rupees 100 at rupees 150. So 40,000 into 150, 60 lakhs. Okay, how much are we going to pay in the form of equity shares? 60 lakhs. Did you all understand this? Further, cash payment 25 for every share in unlimited. Don't multiply this 40,000 with 25. This 40,000, coincidentally both are same, but in case if they are different, in unlimited how many equity shares are there? 40,000, and for every share you will pay 25 rupees in cash. So how much are you going to pay in cash? Second mode of payment, cash. 40,000 equity shares of unlimited, okay, not Amolya, into rupees 25. 10 lakhs we will pay in cash. So what is the amount of purchase consideration? 70 lakhs. Okay, purchase consideration. Now, after this, we'll make the accounting in the books of transferor company. So if you make these formats in the books of unlimited, realization account of approximately 1 page, equity shareholders account approximately 10 lines, Amulya Limited account 4 lines, equity shares of Amulya Limited 4 lines, cash and bank account. Why are we making? Because we are getting this cash in second adjustment. So we have to make cash account also. Left out cash will be given to equity shareholders. So cash and bank account around 6 to 8 lines. Make these formats, pause the video and make these formats everyone fast. And also not only make the formats, I suggest do the accounting also on your own. It is same as question 8, 9 and 10. A lot of practice is done. Then play the video and verify you got it correct or not. Yes, so all of you should have done the formats in the books of unlimited. Let's start with the entries. First entry, realization account debit to assets account. So realization account debit side to assets account. Now first 6 entries will take from balance sheet at book values. So goodwill 5 lakhs. Then after goodwill, tangible fixed assets 30 lakhs. Now don't take 30 lakhs 180%. Okay, they are the agreed values. We are closing the balance sheet. So we have to close the accounts of balance sheet with the values appearing in the balance sheet. Then only the account will get closed. So tangible fixed assets 30 lakhs. In short, when you are passing the first 6 entries, you cover the adjustments. Don't see only adjustments. With your calculator, etc. Keep some calculator on the additional information part. If you don't see only, no mistake will arise. First 6 entries do only from balance sheet. So tangible fixed assets 30 lakhs. Then after tangible fixed assets, next stock 12 lakhs. Then after stock, debtors 5 lakh 80,000. Then after debtors, cash in bank 2 lakh 20,000. So total Directly we can get from the balance sheet itself. The total is 55 lakhs. So first entry is done. Do we have to give any second effect? You all must remember in cash in bank we have to give. First in cash in bank, all of you write down to balance brought down 2,20,000. And opposite side, credit side by realization account, we have transferred this 2,20,000. Okay, so first entry is done, closing of assets. Now second entry, liabilities to realization. To realization, so realization on credit side by liabilities account, now see in liabilities side 9% debentures 5 lakhs and creditors 2 lakhs. 9% debentures 5 lakhs and creditors 2 lakhs. So total 7 lakhs. Okay. So second entry is then liabilities to realization. Now third entry, equity share capital to equity shareholders. So equity shares you all can see 40 lakhs. Two equity shareholders means equity shareholders on credit side by equity share capital account 40 lakhs. Then reserves account debit to equity shareholders, preference share capital to preference shareholders, but we don't have preference share capital. So these three reserves, general reserve 2 lakhs, profit and loss 5 lakhs, export profit reserve 1 lakh to equity shareholders. To equity shareholders, so equity shareholders on credit side, opposite account by general reserve 2 lakhs by profit and loss account 5 lakhs and by export profit reserve 1 lakh. So reserves account debit to equity shareholders is done. Okay. After that, fictitious assets we don't have. Other non-current assets and other current assets items in other asset side we don't have. So all the 6 closing entries are done. Now 7th and 8th entries for purchase consideration. 7th entry, purchase consideration due Amulya Limited account debit to realization account. Amount is receivable from Amulya Limited, debit the receivable. Amulya Limited account debit to realization. To realization, so realization on credit side by Amulya Limited account in bracket purchase consideration. Working note 2, 70 lakhs. All of you can refer the working note 2 done. Purchase consideration is obtained as 70 lakhs. And Amulya Limited account debit. So in Amulya Limited account on debit side, opposite account to realization account 70 lakhs. Okay. Then after that, purchase consideration received. Now how is the purchase consideration received? Equity shares of Amulya Limited comes in, debit what comes in? Equity shares of Amulya Limited account debit 60 lakhs. Cash comes in, debit what comes in? cash and bank account debit 10 lakhs, and Amulya Limited is the giver, credit the giver to Amulya Limited account 70 lakhs. To Amulya Limited, so Amulya Limited on credit side buy equity shares of Amulya Limited account 60 lakhs, by cash and bank account 10 lakhs. Now, equity shares of Amulya Limited account debit, so equity shares account on debit side, opposite account to Amulya Limited account 60 lakhs, and cash and bank account debit, so cash and bank account debit side, opposite account to Amulya Limited account 10 lakhs. And needless to mention, you all must be aware now why we are making cash and bank account, because of this reason only, because we are receiving 10 lakhs from Amulya Limited. Next, after purchase consideration received, sale of assets not taken over, we don't have. See the adjustments. Do you find any asset which is not taken over and sold by the company? No. Then after sale of assets, payment of liabilities not taken over, we don't have. All liabilities, 2 liabilities are there, both are taken over. Payment of expense, we do have. Fifth adjustment. Cost of liquidation of Anu Limited was 75,000. It is not mentioned that it is paid by Amulya Limited, means Anu Limited is only paying it. And we have written that also here, that is paid also by Anu Limited. So what is the entry for realization expense paid by transferor company itself? Realization account debit to cash and bank, 75,000 is the cost. Realization account debit, so in realization on debit side to cash and bank account, in bracket expenses, or you can mention cost of liquidation 75,000, and to cash and bank, so cash and bank on credit side by realization account, in bracket expenses or cost of liquidation 75,000. Okay, so payment of liabilities we don't have, payment of expense done, payment of preference shares we don't have, preference shares itself are not there. Now this fourth adjustment will have extra entry. We have done this in last two questions, 9 and 10 also. Let's pass this extra entry so that when you revise you understand it. Entry number 3, sale of shares. Now we received 40,000 equity shares, 1/5 of that are sold. So how many shares are sold by transferor company? 8,000 shares. Now how they are sold? See that we received at 150 rupees but we are selling at 160. So what will be the entry? Pass two single entries. First, cash comes in, debit what comes in, cash and bank account debit, equity shares goes out, credit what goes out to equity shares of Amulya Limited account. Now 8,000 shares and you are selling them for 160 rupees. Okay, 8,000 shares. So 8,000 into 160. 12,80,000. Okay, 12,80,000 you are selling it. Now 150 is the price but you are selling at 160, means you are earning a profit of 10 rupees. 150 is the price, but you are selling at 160, means profit of 10 rupees. So profit, what entry we will pass? Equity shares of Amulya Limited account debit. Okay, it's a credit balance, so to close it, because it's a profit, it's a credit balance. To close it, you reverse and debit, and profit you credit in realization account. Profit you will credit in realization account. 8,000 into 10, profit of 80,000. So we will do the posting for these two extra entries. Cash and bank account debit. So cash and bank account on debit side, to cash and bank account debit. So cash and bank on debit side, to equity shares of Amulya Limited account. Okay, 8,000 shares are sold and they are sold for 160, 12,80,000. Opposite side, in equity shares of Amulya Limited account, by cash and bank account, 12,80,000. Now profit of 80,000, what we are earning for that? Equity shares of Amulya Limited account debit to realization. So equity shares of Amulya Limited account debit means on debit side, opposite account to realization account, in bracket profit. What profit we are earning? 8,000 shares into 10 rupees. So 80,000. And to realization, so realization account on credit side, by equity shares of Amulya Limited account, in bracket profit, 80,000. Okay, so this extra entry will come because of sale of shares. Now after that, closing entries, realization transfer to equity shareholders, all other accounts transfer to equity shareholders, and equity shareholders must tally. Credit side is more. So first we do credit side total, 77,80,000, both the sides, 77,80,000 minus 55,75,000, so 22,05,000. Okay, 77,80,000 minus 55 lakhs minus 75,000, that is 22,05,000, to equity shareholders account, in bracket balancing figure as well as profit. Opposite side, in equity shareholders account, by realization account, what amount? 22,05,000. Now all other accounts, okay, if journal entry was asked, realization it's on debit side, so realization account debit, equity shareholders it's on credit side, so to equity shareholders account. Now all other accounts will close and transfer to equity shareholders. Amulya Limited account gets closed, no balance remains. Equity shares of Amulya Limited, let's find what is the balance. 60,80,000 minus 12,80,000. So 48 lakhs by equity shareholders account. In bracket balancing figure. Opposite side in equity shareholders account debit side to equity shares of Amulya Limited account 48 lakhs. Then cash and bank balance will also be transferred to equity shareholders account. So 10, 22, 24, 25 lakhs. $25 lakhs minus 2,95,000. So 22 lakh 5,000 by equity shareholders account in bracket balancing figure. Opposite side in equity shareholders account to cash and bank account 22 lakh 5,000. Now, equity shareholders, if at all journal entry was asked, equity shareholders it's on debit side, so equity shareholders account debit. To equity shares of Amulya Limited it's on credit side, to equity shares of Amulya Limited 48 lakhs. Cash and bank it's on credit side, so to cash and bank 22 lakh 5,000. If at all journal entry was asked. And equity shareholders account must get tallied, it must get closed at the end. Let us see, 48 plus 22, 70 lakh 5,000. And cross verify 40, 42, 47, 48 plus 22. This is also coming to 70 lakh 5,000. So this indicates more chances that our entries are correct. Okay. Now I have already given you the instructions in past lectures. If you are comfortable, you can continue watching and complete the accounting in the books of transferee company also. And if not, then you can take a break and then do the accounting in the books of transferee company. Make the format of journal entries in the books of Amulya Limited, everyone. And again, as I said, it's similar to question 8, 9, 10. So advisably, pause the video, solve on your own, then play the video and then verify your entries are right or not. Yes, so all of you should have done with the formats of Amulya Limited. Let us pass the entry now. Which method of accounting we have to follow in the books of transferee company? As we discussed, since it is amalgamation in the nature of purchase, we have to follow purchase method of accounting. Okay, so first entry in the books of transferee company by purchase method of accounting. Business comes in, debit what comes in, so business purchase account debit. And the amount is payable to the liquidator of Anup Limited. Yeah, Anu Limited. Okay, the amount is payable to the liquidator of Anu Limited. Credit the payables. So to liquidator of Anu Limited account. And amount of purchase consideration that we have calculated as 70 lakhs. Okay. Being business of Anu Limited purchased. being business of Anno Limited purchased. Second entry. Now, before we pass the second entry, now we have done a lot of practice. I need not go back to the previous pages and explain you that. We'll have to make the workings of goodwill or capital reserve since it is purchase method of accounting. Okay. So first we find net assets. Agreed value of assets taken over. Now in that, look at the asset side of balance sheet. Very first is goodwill. Okay, will we include goodwill? No, we won't include goodwill because balance amount we are already going to transfer to goodwill. So goodwill cannot come two times. Okay, we'll directly start with tangible fixed assets 30 lakhs. Tangible fixed assets 30 lakhs. Sorry, not 30 lakhs, it is given 180% in the adjustment. Agreed values are to be taken. So 30 lakhs into 180%, that is 54 lakhs. All of you can see here in the adjustment 3, tangible fixed assets are taken at 180% of book values. Okay, after tangible fixed assets we have stock. See adjustment 3, what is stock's value? 10 lakhs. So write down stock 10 lakhs. Then after stock, what do we have next? Asset, debtors. See adjustment 3, it is given debtors subject to 5% allowance or provision to cover doubtful debts. So we already calculated 5,80,000 minus 5%, 5,51,000. Okay, so debtors 5,51,000. 5,80,000 minus 5%, that is 5,51,000. Then after debtors, which is the next asset? Cash and bank is always at book value, 2,20,000. So cash and bank 2,20,000. So total agreed value of assets taken over is 54, 64, 69, 71, 71. 71,71,000. From that we have to subtract agreed value of assets, liabilities taken over. Now in liabilities, which two liabilities do we have? One is 9% debentures and trade creditors. Now 9% debentures we have done in the working note 1. What is its agreed value? 6 lakhs. Okay, so 9% debentures 6 lakhs. And creditors, what is the agreed value of creditors? book value itself. Okay, creditors are taken at book value. It is mentioned here. Creditors are taken at their book value. So creditors, we will take same value 2 lakhs as in the balance sheet. 6 lakhs plus 2 lakhs, total agreed value of liabilities taken over is how much? 8 lakhs. Now 71 lakh 71,000 minus 8 lakhs. So 63 lakh 71,000. What is that? Net assets. Now against that, what is the purchase consideration paid? 70 lakhs. So how much more are we paying? Against that, the purchase consideration is 70 lakhs. So excess amount paid will be treated as goodwill. How much more we are paying? 6,21,000. Why we are paying more? For the reputation. So that is goodwill. Okay. Now directly from this itself we'll get the next entry. So tangible fixed assets account debit 54 lakhs. Then stock account debit 10 lakhs. Okay, assets account debit at agreed values excluding non-current assets, other non-current assets or fictitious assets. So 10 lakhs. Then after stock we have debtors account debit 5,51,000. Then after debtors we have cash and bank account debit 2,20,000. And what else will you remember to debit? Goodwill without fail. Okay, so goodwill account debit with amount of what? In bracket working note 4. What amount have you obtained? 6,21,000. Now two liabilities excluding reserves at agreed values except statutory reserve. But again for statutory reserve separate entry would be passed. It won't be included here. So in that two liabilities will have 9% debentures 6 lakhs. Okay, to 9% debentures with the agreed value of 6 lakh rupees. Then to creditors account creditors with 2 lakhs and to business purchase account with the purchase consideration of 70 lakhs. Same amount what we debited in the first entry. Now you can cross check debit is equal to credit or not. 54, 64, 69, 71, 71 plus 6, 77. 77 and 77 lakh 92,000 is the total of debit coming to. And what is the total of credit coming to? Okay, I'm sorry, this goodwill is 6,29,000. So this would come to what amount? 78 lakhs. Okay. And you all can see this is also 70 plus 2 plus 6, 78 lakhs. So basically debit must be equal to credit, always verify that. Okay. Now, next, being assets and liabilities of unlimited taken over. Now, third entry, settlement of purchase consideration. So this liquidator of unlimited 70 lakhs we will reverse and debit. Okay, liquidator is the receiver, debit the receiver. So liquidator of unlimited account debit with full amount of 70 lakhs. Now look at it, just working note 2 for the payments, how we have paid this money. 40,000 equity shares of 100 at 150. So 100 rupees face value of 40,000 shares will go to share capital account, to equity share capital account, $40,000 into 100. Okay, face value 100 will go to share capital, that is 40 lakhs, to security premium account, now same 40,000 shares, the value is 150, so 50 rupees is premium, so 40,000 into 50, 20 lakhs will go to security premium account. Okay, all of you can see here 50 rupees we discussed is the premium, and cash payment is how much? Look at the workings. Cash payment is 10 lakhs. So to cash and bank account 10 lakhs. Being purchase consideration settled. Okay, fourth entry now. After settlement of purchase consideration, issue of shares in the public. Do we have any shares issued in the public as per any of the adjustments? No. Okay, there are no shares issued in the public. Next, liquidation expenses of transferor company paid by transferee company. But here fifth adjustment, the cost of liquidation of unlimited 75,000. Nothing was mentioned, so we assume it is paid by unlimited transferor company itself. So no entry for even liquidation expenses in the books of transferee company. Then establishment, registration, incorporation or preliminary expenses not given in the question. Next, settlement of liability. Now understand this settlement of liability. First of all, against this 9% debentures, we are giving which debentures in the new company? 10%. This 9% debentures account, we will reverse and debit to close it. So 9% debentures account we will debit with 6 lakhs. Now in this question, all of you mark this entry important. Okay, I told you earlier, because of this entry only I am solving the entire question. Otherwise you will find all other points are exactly similar as previous questions 8, 9 and 10. Now here 10% debentures are issued at discount. See in the language what was given? Issue of its 10% debentures of 100 each at a discount of 4%. And then we calculated in the working note also discount of 4%, so we divided by 96 and obtained 6250 debentures in the new company are going to be given. Now this discount is our loss, debit all expenses and losses. So discount on debentures account debit. Okay, discount on debentures account debit. What amount? 6250 debentures are issued into 4 rupees is discount. 4% means 4 rupees is discount. That comes to 25,000. 6250 into 4. And then 2. Which debentures we are giving? 10% debentures. So to 10% debentures account, 6250 debentures are given. Face value is 100. So 10% debentures with 6,25,000. So this entry is important. Up till now, so far, in all the questions, the debentures were issued at par only. So we directly used to write 9% debentures to 10% debentures. But here the 10% debentures are issued at discount. So you cannot directly write 9% debentures to 10% debentures. We have to debit discount on debentures also. And what is that amount? For that we have done the workings. 6250 debentures are issued. So discount will be 6250 into 4, 25,000. Face value will go to debentures account 6250 into 100, 6,25,000. Also note that this discount on debentures in the balance sheet, if at all it was asked, here it is not asked, but if balance sheet was asked, it would have appeared in other non-current assets. In the asset side, okay, non-current assets, tangible fixed assets, intangible fixed assets, non-current investments, long-term loans and advances. And fifth item, you all can see the formats which I had sent to you. Fifth item, other non-current assets. There we would write discount on debentures in the balance sheet if balance sheet was asked. Okay, being 10% debentures issued against 9% debentures. And the last entry is for statutory reserve, amalgamation adjustment account debit. Okay, amalgamation adjustment account debit to statutory reserve. Here is export profit reserve. So to export profit reserve account. What amount? Statutory reserve or export profit reserve is how much? You all can see it is 1 lakh. Okay, so amalgamation adjustment account debit 1 lakh to export profit reserve account 1 lakh. Being export profit reserve taken over. Now in balance sheet, export profit reserve would come in reserves and surplus, and this amalgamation adjustment will also come at this same place in the balance sheet. Okay, if at all balance sheet was asked, it would come in other non-current assets. We have already done it in the past questions. Now formality, total of journal is required. So 70 lakhs plus 78 lakhs plus 70 lakhs plus 6,25,000 plus 1 lakh. The total comes to 2 crore 25 lakh 25,000. Okay, 2 crore 25 lakh 25,000. So I hope everyone is clear with this question, and ideally you all must have tried on your own and just referred to the video lecture for the practice. If you are not able to still do it, I advise re-solve the entire question again. In exams you have to solve the questions on your own. Okay, That will be all for today's lecture. Bye everyone. Take care. See you. Love you all. Bye.